All right, guys, we're off and running. First off, David, thank you so much. It's a pleasure to be here. Sorry for the few technical difficulties, but it's also a pleasure to be here with all of you. I'm pretty excited for our time together. I'm going to take you guys on a little bit of a journey today. And we're going to look at markets and trading in a little different way than most are used to. But I can promise you by the end of our time together, it's all going to come together and make a lot of sense for you. Maybe even change the entire way that you look at trading and investing in the markets. I know everybody can see and hear me okay. Because of time, I'm going to hold any questions till the end, and I'll answer as many as I can. So make sure you put those in the questions box and everything as we go over the chat. All right, so everybody knows the story, right? We know the story of the tortoise and the hare. What's the moral of the story, right? Going too fast out of the gate is rarely sustainable. Slow and steady wins the race. But how many people apply that to trading, right? Most don't. Most traders are like the hare. They're trying to have it all right now. Let me share some pretty eye-opening stats with you guys. 80% of all day traders quit within the first 2 years. Among all day traders, nearly 40% day trade for only 1 month. Within 3 years, only 13% continue to day trade. After 5 years, only 7% remain. The average individual investor underperforms a market index by 1.5% per year. Active traders underperform by 6.5% annually. Day traders with strong past performance go on to earn strong returns in the future, though only about 1% of all day traders are able to predictably profit net of fees. Profitable day traders make up a small proportion of all traders, 1.6% in the average year. After seeing those stats, I can understand how many may be actually a little bit discouraged, and many of you probably can relate to some of them. I know I can. I was just like that in a lot of ways when I started out. What I'm going to share with you today is a different way of looking at the markets. In fact, for many of you, a different way of looking at trading as a whole. But those of you who have been around the block for a little while are going to immediately see the power in the trading philosophy and strategy that I'm going to share with you today. So if you want more consistent income from your trading, you have to have a strategy for consistent, healthy returns. It's the tortoise and the hare story all over again. Slow and steady wins that race. And that's why when you look at the wealthiest investors of our time, people like Warren Buffett, Carl Icahn, Ray Dalio, and others, their approach is smart, healthy, and consistent income. They find an edge and they use it to their advantage to create asymmetric risk and reward. And that's why Warren Buffett's famous for his 2 rules. Rule number 1, never lose money. Rule number 2, never forget rule number 1. So part of what I want to do today is put you in the driver's seat and show you the complete package of how to set up a consistently profitable trading business, complete with my own trade examples and my chart setups that I use. So I'm going to start by sharing some of the things that I wish that I learned when I first started trading. Number 1, it doesn't have to be hard. It doesn't have to be complicated, and it certainly doesn't need to take a lot of time. When most people start trading, they think you need all this sophisticated software, chart setups, 15 monitors, and on. And it is complicated the way a lot of people teach it. And as humans, we tend to make things more complicated than they have to be. And I'm going to get to more of that here in a little bit. But I've been guilty as much as anyone else. But a long time ago, I learned the lesson of the power of simplicity, and it's paid off 100 times fold for me. In fact, I'm not embarrassed to admit that I still don't know what most of the Greeks and combinations like double diagonal spread or reverse iron albatross actually mean. I found the more complicated that I made trading and investing, the less money that I made and the more effort that it takes to manage. So on the contrary, the more simple the strategies with a slight edge, the more money that I made. So let me give you an idea of what I mean. Did you know that it is incredibly easy to put the odds of winning in your favor just by the types of trades you select to do before you ever even place a trade? Did you know that there are strategies that make money for you no matter what the market does, no matter which way it goes? And have you ever wondered how companies like Goldman Sachs and a lot of the other big boys just seem to print money? And lastly, have you ever thought there has to be a better, easier, less time-consuming way to make money in the market? So your goal was not to beat the big guys, because in reality, you can't. You can't be faster than the pros and the quants. They pay millions to lay fiber optic lines to their trading floor so trades execute a half second faster. What you can do is win by trading in the margins, not with them, not against them. I'm going to show you how to do this today. You're going to learn how you can beat the big guys because you're smaller and more nimble and you don't have to play their game. But first, a little background. Yeah, that's me about 20 years ago. I started my first business with nothing. I had to work 3 other jobs to make ends meet. I was doing kids' birthday parties on the weekends, dressing up like Blue's Clues and other characters. I was serving at a high-end steakhouse. and bouncing at a nightclub. My typical day would go from about 5:30 a.m. till 1 a.m. at night. For a short time, I even lived in my Mazda until I moved into my aunt's basement and eventually slept on the floor of an apartment. There's a pic of the Red Avenger, as I used to call her there. My business eventually did make me some money, about $1,000 a month after expenses, and other jobs helped me to pay the bills, but I was nowhere near where I wanted to be. So I sat down one day and I thought deeply to myself about where I was, and I realized that I knew I needed to learn what I did not know. So I then decided to take action on what to do about it. I went on a 5+ year journey to learn from the most successful and wealthy. During this time, got rid of that first business and made essentially nothing. I went to work in the Fortune 500 space in sales and was very successful, but I spent every extra moment and weekends learning and traveling to meet people like Zig Ziglar, Tony Robbins, Brian Tracy, and networking to meet with millionaires and billionaires, all with one goal: to learn the best secrets and processes for success in all areas of life. As I learned these things, I put them into practice. I started to have even better results. I started investing in real estate and other businesses, some of which I still own today, and teaching people what I learned. After enough prodding, I wrote a book about what I'd learned that became a best-selling book on Amazon called The 10-Year Career. And because of putting what I learned into practice, I've been fortunate to do business with, speak to, and work with many of the world's largest companies and organizations, and travel the world to dozens of countries and places, as well as have companies that have been on the Inc. 5000 list of fastest growing companies and Entrepreneur 360 6 times. But the greatest journey of my life happened about 14 years ago when my wife and I decided to adopt, and eventually several years later, travel to bring our daughter Hannah home from China. If anyone here has ever adopted before, you know how much time the process takes, and especially international adoption, you know how much it costs to do everything needed to bring your child home. At the time, I was highly invested and leveraged. I had put a huge bulk of my wealth into what became my largest company, and excess cash at the time was hard to come by. But I was determined not to have to, quote unquote, finance my daughter. So I got back into trading the markets. And my goal was to create a strategy that I could do alongside everything else that I had going on that could help fund our adoption. And the 12-minute trading strategies were the result. Nowadays, I've been fortunate to sell some of my largest businesses built over the years, and now focus my time and attention on helping people just like you create financial independence through trading the markets, as well as enjoying spending more time with family and pursuing one of my passions, Ironman racing, which I'm ranked top 5% in the world. In fact, it's amazing how racing, the world's most prominent endurance race, is helping to become a better trader and cement some of the principles that I'm going to share with you today. So let's jump into this. I'm going to cover things in 3 parts today. First, I'm going to share the secrets of the rich that I learned over my 5-year journey and how they relate to trading, and the 12-minute trading philosophy with you, and how in just 3 simple steps you can change your whole world in trading. Second, I'm going to discuss the power of simplicity by showing you the exact charting setup I use every day to create cash flow across multiple different strategies in the market. And then lastly, I'm going to walk you through one of my most popular strategies that I teach, the double-double strategy, showing you how I put the power of simplicity to work. All right, part 1, secrets of the rich. In all my work with top investors, business leaders, and entrepreneurs, I learned a few very important things. The successful and wealthy think differently. The successful and wealthy do things differently, and the successful and wealthy understand that success is a process, and there are certain secrets that get you to higher levels exponentially faster. And that brings me to secret number 1. Your mind is your most powerful asset you have to become wealthy. I'm going to say that again. Your mind is your most powerful asset to become wealthy. A lot of people are looking for the holy grail in trading. It is between your ears. Your ability to think and find ways of doing things that either build upon what has been taught by those that have come before you, or to take a concept and create a new way of doing it that gives you an edge, is something that we as humans have a unique ability to do. I found that many of the rich and most successful don't always invent entirely new ways of doing things. Instead, they look for ways, small or large, to improve upon things and gain a slight advantage. The best investors do just this. They know even the slightest advantage can give an asymmetric, think massive return on risk. That was an important lesson for me to learn, and was critical in creating the 12-minute trading strategies, because just by asking how can I create an investment strategy that consistently pays me a great return, doesn't require me to spend hardly any time doing it, and that I can manage from my iPhone, spurred me to start looking at how I can take common trading strategies and make them more effective for me. All right, secret number 2, the rich focus on results. The rich don't work for time, they work for results. This is an important lesson for investors, as it doesn't matter how much time you spend in front of a computer screen looking at charts. What matters is results. I have a confession to make. For all that I do and that I've done, I'm actually pretty lazy. I want to put in the least amount of time possible to get the most results possible. In trading, that means making the most amount of money possible with the least amount of time. For some people, that's a really hard concept to grasp. I'm from the Midwest. We've got that Midwest mentality that you work hard and long hours to get success. And in today's age, that's just not the case. People become wildly successful just by having a large following on Instagram, YouTube, or TikTok. I know people that work really, really, really hard, but they never get ahead. You not only have to work hard, but smart, and you have to make sure that what you're working on is the right vehicle to drive the results that you want. The actual time that you put in doesn't matter to anyone. This was so important in creating the 12-minute trading strategy, is you'll see that some of types of trades give you so much more an advantage that just by choosing to trade them, you not only can stack the odds in your favor, but you can also cut the time you spend in front of a trading screen by 80% or more. All right, secret number 3. The rich look for leverage. This is one of my favorites, and it goes with the last secret of focusing on results. Leverage, simply put, means to do more with less. In order to grow your results larger and larger, you must be able to leverage your time and resources to do exponentially more. And that means get the results of 10 hours of work in 5 minutes. And yes, you can do that every day. My results and the results of people that I've taught all over the world for almost 15 years now have proven this. Leverage can come in many forms. Businesses build systems, things like intellectual property, trademarks and patents, rental property, books. This presentation, this recording can be watched over and over again. Once it's done, that's leverage, right? And then, of course, the stock market. So let me give you an example as it relates to trading and investing. There's not much leverage in buying and holding a stock or option. If you think about it, if you buy a stock or an option, how do you make money? It's not a trick question. For a stock, it has to go up. For an option, it has to go in the direction that you bought it for. For example, if you buy a call, the underlying has to go up. If you buy a put, the underlying has to go down. But if you think about it, a stock or an underlying can go 3 ways. It can go up, it can go down, or it can stay the same. So that means that just straight up buying a stock or an option gives you a 33% chance of making money. To put that in perspective, the odds of winning a hand in blackjack in a Vegas casino are 46.36%. You're literally better off taking your money to the casino versus just buying a stock or an option. And that brings me to secret number 4. The rich are in control. The most successful and wealthy take control of their lives and their wealth. They do not let it be dictated by outside sources or events, and they take full responsibility for their actions and their results. And to me, when I finally understood this, it meant that when it came to building a business or a trading strategy, or really anything, you cannot leave any stone unturned. You have to set up things to account for every variable that you can think of and have control over the whole process if you want to be consistently successful. And that's why it wasn't enough just to learn that buying a stock or an option is a bad idea. It was creating a system around all aspects of the trades that I was going to do that would make the difference. And that brings me to part 2. The 12-minute trading system. In this section, I'm going to show you how to set yourself up for better success all over the board. And I'm going to show you in 3 simple ways how we do it, right? So first and foremost, once you decide to become successful and wealthy, one of the best forms of leverage is to study those that have made it and use what you learn from them to help you accomplish the same results. Looking at the Forbes 400 wealthiest list, immediately something sticks out. The vast majority made their fortune in one of 3 ways or a combination of them. They either owned or built businesses, they did it through investments, or they did it in real estate. That brings me to an investing secret. Successful market investors understand the other 2 areas. They understand how to build a business, and they understand the benefits of real estate that the wealthiest use to gain their wealth, and use those principles from those areas to succeed in the markets. They leverage the secrets from these areas to help them win at a higher level. You see, a trading business should be the same. Great businesses are a collection of systems and infrastructure that work symbiotically with each other and can continue to grow and produce on their own without the founder or the owner necessarily having to be there. If you're not doing that, you're just creating a trading job for yourself. Let me ask you, Would you like to have a trading business that works for you without having to be there every second looking at the market or worrying about your trades? I know you would. And with that in mind, the 12-minute trading system is summed up in 3 simple steps. Number 1, put the 67% odds in your favor before you ever make a trade. Real traders know how to find and maximize an edge, and that's what we do here at 12-minute trading. When I realized that you have a 33% chance of making money and buying, the first thing I thought was, who has the 67% chance? Because that's who I want to be. And the answer is the sellers. I only sell options because it turns me into the house and not the gambler. I'm basically selling to the suckers in the casino, and the house over time always wins. And when you sell something, you get paid. So I'm always getting paid up front to take on any risk. I'm not waiting to make any money. Lastly, selling gives me control. As you're going to see in just a few minutes, when I take you through my double-double strategy, I don't have to be right in calling a stock or a market direction. I play in the margins where the others don't. Step number two, over the years, I've developed specific criteria for ending trades that helps me to maximize my trades, giving me an over 90% win rate. And I track and share all my trades going back all the way to 2013. But with over a 90% win rate, that means less than 1 in 10 will have an issue or get in danger of being attacked. While it happens rarely, I have a whole set of defensive rules that I employ that helps ensure I stay profitable. And lastly, I have clear profit targets for exit that I stay disciplined with. Step number 3, focus on consistent cash flow through base hits and not home runs. I focus on consistent, repeatable returns, or what I like to call based hits. I achieve them over and over again. And these base hits add up to home run-like returns over time and make for a nice, consistent cash flow business without the typical roller coaster ride of winning one trade, giving it back the next, and so on, like a lot of traders experience. I have proven that these strategies can and do win over 90% of the time, even in bear markets. In fact, as many of my students know, last year, many of my strategies, including the T100 and the double-double, which I'm going to show you in a few minutes, had no losing trades. In fact, only one trade got into trouble across those strategies last year that I had to work it out. And that's the power of selling options, because you don't have to be right. You don't have to call a direction or hope for it to work out. You can make money no matter what the market does, no matter which way a stock or index goes. And you can do it in less than 12 minutes a day. And for some strategies, I trade just once a week to achieve my goals. All right, so to sum it up, by choosing to sell options, I put the odds in my favor at 67%. I increase those odds to over 90% through how I enter and manage trades, including using my proprietary indicators and time-tested rules, which I'm going to show you here in a minute. I effectively become the house selling to the suckers in the casino, creating consistent cash flow from the markets, and I do it in less than 10 to 12 minutes a day. And guess what? You can do it too. I had to work a good old Rob Schneider reference in there somewhere. Hopefully you guys are starting to see the power of looking at trading in this way. And that brings me to part 2, the power of simplicity. In trading the markets for over 20 years and figuring out a lot of what I've already shared, I've realized several things. First, traders make things much more complicated than they need to be. I think this is a trait of human nature in general, but I've found that the more simple you can make a trading strategy, the more successful you'll be. I think Einstein said it best by saying, make things simple, but not simpler. When I show you the double-double strategy in just a few minutes, I think you'll understand a little bit more what I mean. Anyone have a trade chart that looks something like this? I used to. This was me in the earlier days. I thought the more indicators that I had on a chart, the smarter that I was and better edge that I had over others. But what I actually found was that I was in stage 4 of the famous trader progression by Bo Yoder, which is called the squiggle trader stage. And here's a description of it. In this stage, you begin to obsessively study of every method and every indicator that's new to you. You buy every book, attend every course, sign up for every newsletter and every advisory service. You register for every trading website and every chat room. You buy more elaborate software. You buy off-the-shelf systems. You spend whatever it takes to buy success. Unfortunately, you stack so much onto your charts that you become paralyzed. With so many inputs, you can't make a decision, particularly since they rarely agree. So you focus on those which you agree with the direction of the trade that you've taken and typically lose. Can anyone relate to that? Anybody in that stage? Everybody's looking for the holy grail chart setup or methodology, and I'm here to tell you it doesn't exist. The closest thing to the Holy Grail, as I alluded to earlier, is between your ears. Your control over your mind and your emotions. But that's another talk and a presentation for a different day. So the lesson is the more indicators that we put on a chart, the harder it is to trade successfully. And that's what I want you to take. The more that you pile on a chart, the harder it is for you to succeed. And after several years of going through this, learning this lesson for me kind of the hard way, I simplified it to just 2 indicators and now focus my efforts on price action with those 2 indicators. And for me, this has helped equate to over 90% win rates in my trading for over a decade. And yes, through last year's bear market as well. All right. The more often that we trade, especially based on emotion, the more we lose. The last realization is that the more often you trade, the more often, especially when it's moving existing trades around due to market movement and based on emotion, the more you're going to lose. When you abandon your rules and your setup because of emotion and feeling, you make more mistakes and you enter more trades to fix the mistakes, causing you to exacerbate the problem, and you lose more. In fact, the biggest winner is your broker making a ton of money off trade commission fees. And with that said, I want to show you guys my chart setup and explain how I use it for all my strategies. I use the same chart setup for 5 different strategies that I do, short through long term. So let me pull that up. I'm going to stop sharing this, and I'm going to get that up on this screen over here for you. And here we go. Pull you over there. There we go. Chart is good. Fill the screen with it. All right. All right, so everybody should see on my screen a chart of the SPX. So here's what you see, right? So I'm going to start with the daily chart, and we'll talk a little bit about the time frames here. So as I said, I use 2 indicators. I use the Bollinger Bands, which you can see the red and the purple line here, and I use my proprietary fractal energy indicator that I have custom coded over the years. What the fractal energy does is it tells us when a chart is ready to trend. It doesn't tell us which way it's going to go. It just tells us if a chart is ready to trend. If it's up here above 60 or around this range, it's ready to trend. If it's down here below 35 into the 25 range, it's exhausted. And so what you can see is I've got this custom coded to tell me when I'm around that 60 line within a certain amount of it, and I'm near the upper Bollinger Band, it will be yellow. When I am down and near, or sorry, it will be yellow when I'm at the lower Bollinger Band. When I'm at the upper Bollinger Band, it's going to signal kind of this magenta color. And so what that tells me is that, okay, I'm at the top of a Bollinger Band range and I'm fully charged and ready to go, or I'm at the lower Bollinger Band range and I'm fully charged and ready to go, or I'm exhausted. And the reason this is so important is the Bollinger Bands I love because they're like the ropes of a boxing ring. They break, they bend, but they don't break. So when a stock hits them, you can see a stock will come into them, but then it gets thrown back in, right? It comes up, it hits them, gets thrown back in. And that's what the Bollinger Bands do. They can widen and go a little bit, but typically they're going to throw things back in. So one of my favorite setups is I like to see when we get to the lower Bollinger Band, and I actually like to see exhaustion. And then I sell into that because that means we're going to have trouble continuing to trend in the direction we came for. See, we were charged up. We blew out this energy, right? Got down here, and guess what? We were out of energy. It's hard to continue this trend. What we do, we charged back up to really the highest charge that we've been in, really a whole year on this. And that's the trend that we're in now off of that, right? So we started here and now we're trending it. And we can see you're about halfway through the energy or a little bit more, right? We have to get down into here to get exhausted. So this trend, just based on the energy, has a little more to go. And I'm targeting 4,100 over the next week into the Fed, bleeding this energy out, right? We may see a run at it tomorrow with the, the PCE and stuff. So, but that's kind of what's going on. So this trend isn't over yet. It's still going. So that tells me that, this has a little bit more to go. And when it gets to this upper Bollinger Band, probably up here around that 4,100 range, that's probably when we'll stop and we'll come back in line. So these are the 2 indicators I use. And I use them because they signal this pretty much every time, right? They're consistent through all the different markets, whether it's a bear, a bull, and that sort of thing. In an uptrending market like we had in, prior to last year, when we were just uptrending, it was so easy to, when you got down here and you got exhausted, just sell into this, sell put spreads, sell naked put, sell other trades down there and let it run away from you, because that's what it would do. When it got to the top side, sell the call side, let it run away from you, because that's what you do. And so you can play the swings of the market really easy with this, but you can also use these indicators to help signal where to place trades. So for example, if you're going to trade a little longer term, I like the weekly chart, right? So the weekly chart, you can see, is gotten fully charged up. It's the full charge. It's the charges that it's been in 3 years, because it's a 3-year weekly chart that's on here. So what that tells me is we are on the cusp of a major trend. A daily trend, like you just saw on the last chart, can go for roughly 5, 7, maybe 10 trading days. A weekly trend, when it releases, can go for a number of weeks, right? Each one of these is a week. So like this trend right here went for 6, 7, 8 weeks. These things can go upwards of 12 weeks or so. So we're on the cusp of a massive 12 to maybe even 15-week market trend. And I think it's going to coincide with the Fed announcement next week and everything else from there. And that's going to set the tone for the rest of the quarter. So we're either going to see this continue and release higher, and that's going to take us to new highs and take out this old high that we had here. We've already put in what's called a higher low, as a lot of you know. So this is a great level of support, and a higher low, as you know too, is what you need to do a paradigm shift, right? When you're making lower highs and lower lows, you're still in that trend. But as soon as you make a higher low and then go to a higher high, that is a polarity change in the market. So we're going to see if this thing is going to make this run, especially to 4150, because that's the upper Bollinger Band right now, and bust through that. If we can bust through and get this kind of squeeze that's set up on the charts here to open up and allow it to continue to run higher, then we are probably going to run for the rest of the first quarter. That doesn't mean we're straight up, right? We'll have some weeks that are down, some weeks that are up, but overall we'll head higher, just like we're seeing here. And you can kind of see we had a little bit of a squeeze back here. Now, squeezes aren't as defined for the Bollinger Bands on a weekly chart as they are on a daily chart. But this is when they get close together, think of that. I always say, like when you get a squeeze on a chart, you think of like putting water in your hand and squeezing your hands, right? What does the water do? It comes flying out of there, right? And so that's kind of where we are. This is kind of squeezing together, and this thing's going to pop out of there in either direction. And again, I think that's going to coincide with the Fed, because we're really close to releasing this thing. And this, what'll happen is when it does release for a week or so, this will start to turn over. And what I like to do on a weekly swing is I like to let it get it down to about 50 or so on the energy and show me the direction that it's going. And that kind of confirms it for me, and then I can play it. So you don't always have to trade every single week, right? You have to let the market sometimes reveal itself. And so that's what I'm going to do. That's what I'm advising my students on even next week. We're just going to sit back, let the Fed do its thing. Let's see what happens, and let's see what this chart tells us that it's going to do. But overall, guys, this is what I use. This is what I do on a daily basis. And you can go to smaller time frames. Say you're an intraday trader. I like the 1-day 5-minute chart. This will tell me, hey, we're charged up, right? We were charged up. You can see we released upward and then blew that out, right? And got exhausted, walked sideways, right? Because we went outside the Bollinger Band. What did we do? We came back in. Now we're charging back up, going to the end of the day, probably make a little run up in the end of the day here based on how this day is going, or maybe sell off into PCE just to take some profits off the table ahead of the announcement. So the 5-minute, 1-minute chart, you can look at the 5-day 5-minute chart, give you a little perspective too. See, same thing. We're charging up. We got outside, popped back in. Now we're kind of charging up, moving along. The 5-day 15-minute chart's a really good one. That's kind of the move that we just saw break out in the last hour or so as I came into this. See it break it out, and it's trending down. It looks like it's continuing higher, and it's not outside the Bollinger Band. So these usually end about here. So this is almost over, I'd say. And then we may see a little bit of pullback into the end of the day, charge it back up. And then the next time frame that I like to use, again, shorter term trading, like within a week, is a 30-minute chart. So look at the 30-minute chart. This whole thing today was just one big sideways move so far, charging itself up. So this is a 10-day 30-minute, and this thing's just starting to release. So we may just be continuing to head higher from the 30-minute chart. And then we lastly have like a 10-day 1-hour chart. So you can see this move today, though, has taken that energy out of that 1 hour chart. So we're not completely exhausted yet. You can see typical exhaustions down in this range down here, but we're getting close. So maybe 40, 50 in that range we get up to, and then maybe tomorrow, a little bit of maybe a pop on the news. If it's good, then we pull back some, maybe even have a little bit of a down day just to charge this thing back up. So tomorrow could be one of those days. And I could see that going into the Fed, maybe a little bit of malaise as we grind a little bit higher and stuff. But that's how you use the Bollinger Bands and the energies to kind of time things and everything else with the charts. And you don't need really anything more than that. So that's how I use them. So now let me talk to you a little bit about how we put that into a strategy. So let me jump over there and we will do that. All right, so back to the presentation. All right, so as we talked about, really, the power of simplicity is the energy, the Bollinger Bands, and the price action, right? That's what I watch, the energy, the Bollinger Bands, and the price action. And lower Bollinger Band, exhausted energy, great place to sell into. Lower Bollinger Band, full energy is a great place as well too, because typically it's charged itself back up, going the opposite direction. Maybe it use the energy to go up and now it's come back down and charge itself back up and it's going to go back the other way. But the Bollinger Bands, again, those ropes of the boxing ring that kind of keep things in, they bend, they don't break. They're great things to place trades at or outside of to give you an extra really good support or resistance level. And I use it across 5 different strategies, short through long time, from weekly trading and on up, right? All right, so let's talk about the 12-minute trading double-double strategy. There's 5 different strategies I mentioned that I employ of 12-minute trading advisory service, and they cover everything from weekly cash flow to passive hands-off income over 6 to 8 months. I'm going to show you one of the most popular ones, which is my double-double strategy for monthly income. I do these every week, and the goal is creating consistent monthly income. It's an iron condor strategy designed to maximize cash flow. It stacks the odds in your favor for income over a 4-week or less period, and I target 4% return on risk. It's traded every week. Trades are set up on Sunday evenings in 10 to 12 minutes is good to cancel orders, and trades typically fill Monday AM, and the actual average time that I'm in a trade is 2.1 weeks. So why is it called double-double? The strategy is designed to double the trading capital allocated to the strategy in the course of a year. Simple math, if I'm making a 4% minimum return on risk every 2 weeks, that compounds to a little over 100% per year. Now, obviously, that's the goal. As I mentioned, with a 90+% historical win rate on my trades, that means not every trade's going to work out. But how many of you would be happy with a 70% return or 50? Heck, even a 30% on your money in the course of a year, spending 10 to 12 minutes per week to set up your trades? I bet a lot of you would. I know I was really excited when we finally nailed this thing down. So let's talk about how these trades work. I set these trades up on the indexes or the index ETFs, such as the SPX, NDX, the RUT, the SPY, IWM, the Qs, the DIA. What you see on the screen is a chart of the SPX that I just grabbed actually this morning. Working with our mastermind group that we have here at 12-Minute Trading and some other professional traders, we've done an exhaustive analysis on max movement in a given time frame for each index. So I know what the max move up or down over the last 5 years is for all the index timeframes, from 1 day to 1 week, month, and so on. So remember me talking earlier about increasing my odds, not just by selling options, but my rules for entering trades. This is part of increasing those odds. I look for the chart that allows me to place my trade outside those max move levels and still pay me a 4% return on risk. And if you remember me speaking about the simpler that we make our trading, obviously using the Bollinger Bands and my proprietary energy indicator, I like the Bollinger Bands because I want to place my trades at or outside of those as well. So for the double-double strategy, I like to set my trades outside the max move levels and also outside or at least at the Bollinger Bands on the weekly chart. So as you can see on the SPX weekly chart on the screen, the upper Bollinger Band's at 4150, which we just talked about when we were looking at it a minute ago, and the lower is at 3573. The trade that I use for the strategy, like I said, is the iron condor. For those of you that don't know what an iron condor is, it's simply selling a call spread and a put spread on a stock or index that's the same size and in the same cycle. For example, for this trade, I'm going to be selling the February 28th cycle, which is about 4 weeks out. The example I'm going to use is a 10 wide iron condor on the SPX, meaning that my risk is $1,000 per contract. My goal is to make a minimum of 4% or 40 bucks per contract. And I do different sizes each week of these ranging 10 to 50 wide. Since I know that I need to be at or outside the weekly chart Bollinger Bands and also at or outside the max move parameters, which you can see on the screen are 43.36 on the call spread side and 36.18 on the put spread side, my job is to see if there's a setup that allows me to do that and get my 4% in net credit. So here are the options chains from this morning, and I can see that I can sell the 28th of February 35.65 by 35.75 put spread, and I can get 35 cents for it, which is right at that 35.73 range of the lower Bollinger Band on the weekly chart. And it's also well below the 36.18 level based on the max move data. In fact, the example that I'm going through now is probably going to be close to the actual trade that I share with students in this weekend's newsletter. So you'll notice that although my target on the trade is to make 4%, I'm selling this side of the condor to pay me 35 cents or almost 4% itself. But remember, I've got the other side to sell and still get paid on. That's one of the great benefits of the iron condor, which I'm going to expand more on in a second. But first, let's discuss the call side. So on the call side, when I look at the options chains, I can see that the upper Bollinger Band's at 41.50, right? And it's or the trade that I'm going to do, I can get well below the 43.36 level. In fact, I can do the 28th of February, 43.50 by 43.60 call spread, and I can get that for about 35 cents as well, right? So as with the put side, although my target's to make 4%, I'm actually selling this side of the condor to pay me another 35 bucks. So my total credit from selling the iron condor is $70 or 7% return on risk per $1,000 contract. That's the beauty of the iron condor. You can profit off the same risk on both sides. A lot of people will just sell put spreads or call spreads, and those can do well, but they're missing the leverage of the condor, allowing them to sell further out of the money and profit from the same amount of risk on both the top and bottom side. So why doesn't your broker set aside $1,000 in risk for both sides of the trade? Well, if you think about it, if you're going to lose on the trade, and losing is where the price of the underlying goes through your sold strike. So in this case, the price would have to come all the way down to 35.75 or go all the way up to 43.50 within the next, well, really couple weeks, right? Possible, but pretty unlikely. And the price cannot be at two places at once on expiration, right? So you can't lose on both sides. And that's another form of leverage. And that's why your broker doesn't set aside extra money on the trade. And if you remember, one of the secrets of the rich was they look for leverage to help them succeed. So iron condors give you leverage. I like to get 70 to 80 bucks per each contract on a 10 wide condor in the double strategy. Sometimes I get 90 cents to $100, but it allows me to exit earlier because I can then use some of that credit to buy back the trade early and then turn around and put my money back to work with another new double trade. That's why the average time that I'm in one of these trades is 2.1 weeks instead of the 4 weeks that I've sold them out to. Every day that the price is not at the strikes of the condor, because they're an option trade and they have time limits to which they expire, they're losing value. And after a couple weeks or so, I can buy them back typically for 10 to 20 cents, exiting the trade early, ensuring my 4% goal. And once I'm in the trade, there's really not much for me to do but let time work on it until it exits per my orders, because we're so far out of the money. Of course, I have other trade management rules, defensive rules that I use to ensure success on the trade, just in case. Let's say that let's say the SPX runs 350 points in the next 2 weeks, right, from where we're at. Well, I'd have to adjust this trade, right? So I have defensive triggers and all that stuff for that if I need it, but it's very, very rare. I don't have time to go into that all today, but hopefully you can see the power of the simple strategy to create monthly income in an easy and consistent way with minimal effort each week. I set these trades up Sunday night. They fire on Monday morning. I put the order in to buy them back. Takes about a minute, which I'll get to in a minute. And it's set up and just let it run. So, all right. So let me sum it up for you. Per my analysis of the weekly chart Bollinger Bands and the max move data, I choose the best index or index ETF to sell the double-double iron condor on each week. I sell in 4-week cycles using the weekly and regular monthly option cycles, and I set up my trades as good to cancel orders on Sunday evenings. I target a 4% return on risk for the trade and typically sell my positions to give me a little buffer of credit. I use that buffer to buy back the trade for 10 to 20 cents usually in about 2 weeks. Once in the trade, there's really not much that I need to do, but let time work for me until the exit. So what are your risks? And I talked about this in a second. A second ago, one of your sides of the condor could get attacked, causing you to lose that side of the trade. It's not impossible, but the double-double is set up to start with an over 95% chance or better of winning. Now, I have those defensive rules that I employ, which typically is just moving the condor with the market a little bit, right? Moving the top side up and the bottom side up if we're trending higher, moving the bottom side up and the top side down a little bit if we're trending higher, balancing things out still at my risk levels and everything, and just ensuring that I move with it if I need to. But again, that's pretty rare. Even with this move up that we've had to start the year, I haven't really had to make any major adjustments in any trades or anything, and I've been winning these every week. So the question becomes, can you see the power of this type of strategy? Can you see that it can give you leverage in the market and allow you to create steady monthly income instead of just buying a stock or an option and hoping that it goes the way that you want it to? Can you see how understanding the system can help you have control over your income and provide great returns? And lastly, and most importantly, can you see the power of using a strategy like the double-double to create an investing system that can work for you consistently with just a small amount of effort every single week? You can have a professional trader-like business without spending professional trader-like time. Using the power of leverage and focusing on utilizing trading strategies that only take me 12 minutes or less per day to manage, I figured it out and now trade the system and strategies such as the double-double that I've shared with you, allowing me to enjoy life, create great income, and do it from wherever I want in just a few minutes a day. So a lot of people ask, hey, how does this break down to 12 minutes? Well, usually about 6 minutes to analyze, check the charts for the key levels on the Bollinger Bands and the max price movement. 2 minutes to check the options chains to make sure they're giving me the required return. 1 minute to set up the trade, typically less. 2 minutes to check in and see when it's filled. 1 minute to add my good till cancel exit order. And I can do it all from a smartphone. And it typically, to be honest, takes me less time a lot of days. All right, so let's summarize everything from today. In part one, we talked about how the successful and wealthy think differently. We talked about how the successful and wealthy do things differently. We talked about the 4 secrets that set the successful and wealthy apart. Lastly, we discussed the power of bringing these together to create a winning system. We also talked about how the super rich make their money. We talked about how top investors learn from the business and real estate worlds and use that information to help them better succeed. We learned the 3 steps to create trades that win over 90% of the time. And lastly, you learn that by setting up a trading business built on selling options and stacking the odds in your favor, you do not have to do right and can still profit. In part 2, we learned the power of simplicity. Traders make things much more complicated than they need to be. The more indicators we put on a chart, the harder it is to trade successfully. The more often we trade, especially based on emotion, the more we lose. And we learned how using chart energy, Bollinger Bands, and price action can have helped me achieve over 90% win rates annually. And then in part 3, we reviewed the double-double monthly cash flow strategy. We discussed the leverage of iron condors and the benefits of them when used for a strategy like the double-double. We discussed how this can be done in 12 minutes or less each and every week. We also discussed how you can easily set up and manage a strategy from anywhere using your smartphone, creating consistent income in the markets. By now, you're probably wondering about this, but what if I told you you could put a secret of the rich to work for you and have even more leverage, and that everything I just went through could be packaged up and done for you and delivered on a weekly basis to your inbox, complete with video analysis, trade setups, and access to me and my team? Would you be interested in that? Well, that's what we provide our students in the 12-minute trading advisory weekly service. You literally get to look over my shoulder, trade alongside me and my team each and every week. The service includes 5 different option selling strategies, from selling weekly options for income, monthly like the double double, up to 6 to 8 month cycles designed to be more set it and forget it as much as possible. The goal is consistent passive income with little to no effort, base hit after base hit. And if you're new to this style of trading, we provide all the training you need, as well as live training sessions with me and our other experts throughout each month to help you learn and become successful. I've worked extremely hard to make the 12-minute trading weekly advisor service the most comprehensive and best value service in the marketplace. We deliver everything, and I mean everything. A service, like I said, that includes 5 different short and long-term strategies, tested and proven to work in any type of market. Weekly advisory newsletter, complete with market overview and my personal trade setups that I'm doing each and every week, so you can see exactly where I'm putting my money to work. Weekly video analysis of the market and trade setup, so you can look over my shoulder, see exactly how I'm doing things and why I'm doing it to accelerate your success in learning. Midweek update. I do a midweek update every Wednesday with a trading game plan for where we are and what's coming next. Trade alerts for any move I make prior to me making or taking any action. That is something that we do much differently. A lot of people will make a trade and then alert it out and tell people. I alert and say what I'm going to do prior to doing it. And I do it through text and email so that we make sure it's delivered. Comprehensive student portal, complete with video training on every aspect of each strategy and other resources to help you with your trading skills. And then live training sessions each and every month where I teach on the different strategies and where you can attend and ask questions, get guidance, as well as special members only event. We just had our year in review event, which, had hundreds of people attend. It was a great time. So we do a lot of unique things like that, all for just $97 a month. One contract of one trade that I do on a weekly basis pays for the service. And I've always kept it that way because I wanted to make it easy for people to get in, pay for itself, and start learning so they can get on their road to financial independence with these type of strategies. And as a special gift for attending this event and spending time with me today, I'm going to give you a free 2-week full access trial of the service. After that, if you want to continue, it's just $97 per month and you can cancel at any time. So you have literally nothing to lose. Like I said, one contract of just one of the trade strategies I do every week pays for it. So all you have to do if you want to get this, www.12minutetrading.com/ST. Again, that's 12minutetrading.com/ST. And that's really it, guys. I'll stop there for any questions that anybody has, and we'll jump in. I think I see some coming through. I would try to go back on video, guys, but I'm not going to chance it with what happened earlier. So let's see. Which day of the week do I put on the trade? So I think I answered that. For the double-double, I set up my trades. They come out in the newsletter on Sunday night. It's delivered every Sunday at 5 p.m. Eastern. All my trade setups are in there for the week. If I need to make any adjustments as we get into Monday, maybe we got a big gap on Monday, I send out an alert prior to market with any adjustments that I need to do. And sometimes based on what I see, I may say, hey, I'm going to hold off. Like, for example, next week we've got the Fed, the middle of the week. We've got jobs at the end of the week. So I probably will not enter double doubles until after the Fed announcement. I want to see if this weekly chart energy really starts to trend and stuff over the next week so we can take advantage of it, right? So I'll let everybody know that in the newsletter. But any trade that I'm setting up on Sunday night, typically will fill Monday morning at open or within the first few hours of open. Is that once per week or every day? The double is done once per week, but once you learn the strategy, if you've got the capital and want to do it, you could do them every day. They just move slower, right? So I can put them on once a week, and it's not going to be much of a difference entering one on Monday versus Tuesday or Wednesday even. Even with a 50 to 70 point move in like the SPX, there's not going to be much difference in those. You would need to go 150 to 170 points in the span of, 3 or 4 days for it to really make an impact on the trade early on. Do I have everyday sessions? I don't do everyday sessions. I do live training sessions throughout the month. I've got others that, are 12-minute trading that I have that do daily trading rooms, focus on like daily trades, using some of these same principles and everything too, but I don't do those. Heavy earnings the next couple of weeks. Should we wait to sign up versus the free trial now? Actually, no. I look, a free trial is a great time to get in and see how these things react. I've got current positions on that I'm going to have through all that stuff, so you can see exactly what I'm doing. I won't stop doing the double-double trades through like the Fed and earnings and that type of stuff. It doesn't really, that trade isn't such a big deal with that. I may just wait till after like the Fed, because there's no rule that says I have to do it on Sunday night. I just got to do it every week, right? So I'll let a risk event like that happen. And if it triggers a, energy release, like, I kind of showed and stuff, then I'll take advantage of it. So it's a great time to see how that works. Great time to learn that. My trading strategies that I do weekly, that's something that I will either hold back on or sim trade just for the next week, letting the Fed do its thing and then play it from there. There's just no point to step in front of a freight train if we're going to get one. Because if that weekly releases, guys, it's going to be one heck of a trend. So I'd rather just be on the right side of it and run with it than, step in front of it in any way. It's just no point. What's a few days? Doesn't matter. No long-term commitment, just $97 a month. It's month to month. You can cancel anytime. Guys, I semi-retired years ago. I do this because I really, really enjoy it. And I've seen the power that it has for people in their lives when they finally understand how to do this, how it can change their life and how they can really escape the rat race and do the things that they do. I've taught thousands of people around the world how to do this over the years. And I really get a lot of joy out of that and excitement out of that. But I'm not locking somebody into it if that's not for them. Like that's not good business, and it doesn't make sense to me. I don't, I pretty much the thing's priced to cover its costs with a little bit extra to help pay our people and stuff to help support and do that stuff, right? So this thing isn't like some crazy moneymaker in that sense. I just love doing it, and I love sharing these things with people and helping them get the breakthroughs. And I trade it myself, every week throughout, and it helps keep me on my game. Honestly, producing a newsletter every week, having to analyze the markets, doing all that stuff really keeps me in sync really well, and I love that too. And so there's a dual benefit of it. So no long-term commitment. It's month to month, $97. You can do it for a month and quit. You can stop anytime. So there's really no commitment like that. No hard sell here, guys. You want to try it? Awesome. If not, I totally understand. No problem. What's your rate of return yearly? So last year, it depends on the strategy. So last year I had one double trade that, didn't win. The rest, I do them every week. So you look at, I had about 56 of them. And I think the return ended up being about 58% overall on the strategy. I'd have to go back to the spreadsheets and look, but I think that's about where it was, for the year on those. So it was a nice return. The weekly trades were about in the same range. They trade faster, and I go for 2% on those. Same principles, guys. Same principles, just a little different time frame in how we do it. Yeah, out of 52 weeks. Because sometimes I'll add an extra 1 or 2 in there if we've got a good opportunity. Yeah, it was about 58 trades, Nasky. And again, if you sign up for the trial, you get access to the trade history. So you can go right to the trade history double trades, and you can look at every single one for the last year and how they performed. And again, the trading history goes all the way back to 2013. All right, I'm getting close to the end of my time. Again, if you, we'd love to have you take a chance at the trial, check it out. Like I said, get in, kick the tires. In fact, the code for the fractal energy indicator is in there. All the students get it. So yes, you could sign up for 2 weeks, take the code, have it for Thinkorswim. You'd have whatever the version is now. We update it regularly. But you'd have that version. You'd be able to use the code for the fractal energy with the Bollinger Band set up and everything that I showed on the chart. So, again, if that helps you and the trading style is not for you, but you can use that, great. Congratulations, you can get that. So, grab that, kick the tires, see if you like it. If not, like I said, no hard feelings. Thanks for checking it out. And I just really appreciate all your time here today. And sorry for the few technical snafus at the beginning. David, I'll turn it back over to you.